Good afternoon. It's January 2nd, 2026, and I would categorize today as a range day that failed to break lower. Uh, if you look at the daily chart, it turned out to be a doji. I thought, the selling made sense because we're at the top of this range that this is the daily chart, right? So this goes back to September because that's October. Yep, September. So we've been in this range since September, and we're at the highs of the range. So I think we're gonna test the 100-day moving average. That would make sense, but we did just bounce at what would be the midline of this range. So we could reverse. This doji is not what the bears want to see. And here's a look at the weekly chart. We closed the week with a tail on the bottom. So that is also not what the bears want to see. But keep in mind, we're also at the top of the range on the weekly chart. So anyway, here's the intraday chart. I'm looking at the 2700 tick chart today. Uh, if we zoom in, so this price level where we find resistance comes from yesterday at about 11 a.m. So if you come in today at 5 o'clock, we're selling off, and it looks like we correct to what would be about the midline of this range at around market open. So you can see it bounces, then we form a double bottom, lower low, double bottom, before bouncing, testing the high again, and you get a bunch of sideways stuff. So this is a great place to get short. And you can get short on limit orders up here, or you get a great stop market entry below this great signal bar. And if you're entering with multiple contracts, you can exit at the previous lows, partial profits there. What would you? So that's a 16-point move, 15-point move, we'll call it. And if you just take partial profits there, you get another uh, 22 points beyond that if you hold. So I don't see a reason to just hold beyond this. I think when it gets down to these lows, you got to just trail each bar. So let's say you get stopped out above this bar with a small bull body, or you could wait for some more, more evidence that we're reversing, like this bar with a strong bull body, or even this higher low double bottom right here, far from the EMA. That makes sense. Any of these make sense. But that's a very good move based on logic. You could enter long here uh, on a stop order. And again, if you take profits at the midline, that's what a bunch of other people did. It makes sense. I don't I don't really like going short here, even though that's a nice strong bear bar. You're just at the midline of the range, and you're in the lower third or close to the lower third of the range. So it's just not logical to enter short there. We come back down here. You could enter with limit orders long here, but no good, real good stop orders. Then we go lower. So, the question at this point is, are we going to continue lower? Well, here it doesn't look very strong. You get a nice, strong second entry short off the EMA right here, and that probably traps a lot of bears, but it also confirms a trend line. So could you do that? Yeah, you could do that. It's risky, um, but that's a strong bear bar. So I think it's reasonable, but you have to go for a scalp. We're breaking out, and we don't know if it's gonna reverse, and it probably will reverse because it's the first time we had a breakout of this range. So you get 3 consecutive strong bull bars, and then we get a bear bar. and then we just go sideways for a while. So I think this would be a good time to try and get in on the try and get long here. And if you just buy down here, well, you're going to want some extra room beyond the previous low, because this is exactly what happens. It makes a new low barely, and then it reverses. And so the measured move would have saved you, but uh, if you do the same thing over here, you'd probably get stopped out. So look right here. Whoops. Same thing happens over here. Let me just draw this level of support. People are getting long and they're getting trapped. It goes just a couple points beyond where people's stop would have been, and then it reverses. And this one's a much stronger reversal than this one. But anyway, once we break out into this range, maybe use the measured move to look for an entry. That would have been almost perfect, especially when you get this big, strong bear bar. That looks like exhaustion. Buy right here, limit order. You got a lot of upside. Um, I think it makes sense that people are taking partial profits right where the larger daily range begins. But it makes sense to also hold till the midline, and that's what happened down here. So anyway, we come back in and we start selling off, and I don't think you want to get short because these breakouts failed and we broke back into the range. So I don't think you want to get short here. I think you got to be patient and buy a new low. If it gets to that point, look how big this bear bar is. That's probably exhaustion. So yeah, buy a new low. And again, it makes sense to take profits at the lows of the range. That's exactly what happened here. But if you're trading with multiple contracts, try and hold till the midline. And that's what happened. People held to the midline, took profits, and that pretty much ended the day. So we took a look at the daily chart. We took a look at the 2700 tick chart. We took a look at the weekly chart. Here's the monthly chart. No real information, but like I've been saying, I think that we're just going to chop up and down until we get to this trend line. Will we create a gap above these highs from December of 2024? We'll just have to wait and see. So, hope everyone had a good day. I'll be back Monday.